91 companies didn't pay a dime in federal income tax in 2018, according to that new report from the Institute of Taxation and Economic Policies. Fortune 500 companies avoided $73.9 billion in tax under the first year of the Trump Tax Cuts and Jobs Act. Joining us now is one of the authors behind that report, Matthew Gardner, and Yahoo Finance's Kristen Myers is with us as well. And Matthew, let's start with this report. The headline makes us all gasp, but then the counter sometimes is that, well, these companies do pay taxes. It's just not the federal income tax, but they pay a Social Security tax and they pay into Medicare. What do you say to the critics who say that perhaps when we talk about your report in the headline, we're missing something? Or are those critics missing something?
Well, we all pay many different kinds of taxes. The difficulty with that argument in this case is that there is one principal tax that profitable U.S. corporations are supposed to pay that represents the lion's share of their contributions to help pay for public investments. It's the corporate income tax. And so when you see a small number of the very most profitable companies avoiding all involvement with this principal tax, that's a real problem for the U.S. budget.
Matthew, talk to me about how this has changed over time, because I know your analysis in this report focuses specifically on the latest tax changes to tax law enacted by President Trump. But I mean, it seems like it's a pretty old problem that corporations have been taking advantage of loopholes.
It's a very old problem. What has not changed is that companies now, as was true 2 years ago, 10 years ago, appear to be avoiding any tax on about half of their income overall. Whatever the legal tax rate is, the effective tax rate, that is their overall tax as a share of their profits, pretty much half of that. That was true then, it's true now. What's new now is that we have a statutory tax rate, a legal tax rate, that is way below what it's ever been in modern U.S. history at 21%. This is the result of the 2017 tax cuts engineered by Congress and President Trump. And the hope a lot of people had, those who want a sustainable corporate income tax, was that this reform, as it was called in 2017, would do two things. One was to lower the rate, but the other was to broaden the tax base, getting rid of loopholes so that whatever the sticker price was on the corporate tax rate, whether it was 21%, the 15% that President Trump wanted, or the 35% that it was before, companies would actually pay it. And so pretty clearly that has not changed. Companies are still finding ways to avoid much, if not all, of the tax they ought to be paying.
So, Matthew, how exactly are companies able to avoid paying taxes on their income?
The first thing to say about this is that it appears to be entirely legal. It appears to be the product of tax breaks that Congress has enacted over time at the request of these same corporations. There's no indication of legal wrongdoing. Tax breaks for capital investment appear to be a big part of it. Accelerated depreciation, which got expanded to something called full expensing in 2017, letting companies immediately write off the cost of their capital investments, appears to be a major driver in these results. There's a tax break that allows companies to write off the cost of executive stock options, which for many companies is big. R&D tax credits. Tax breaks for producing alternative fuels, tax breaks for producing conventional fuels. You know, there's a whole host of tax breaks in the code that collectively have this pernicious effect of substantially reducing the taxes paid by the most profitable corporations. I think it's important to add that this doesn't exonerate these companies from wrongdoing, the fact that they're using legal tax breaks. First, many of the same companies, Amazon, Facebook, Microsoft, Apple, have been accused and are currently embroiled in legal suits over what appears to be illegal tax actions offshore, shifting their profits to other countries. This is not that, but those allegations are still out there and are still being investigated.
All right. Matthew Gardner, Senior Fellow at the Institute of Taxation and Economic Policies. This is going to get a lot of discussion, especially with us heading towards an election. We appreciate your being here and hope you can come back.
Looking
For records here for the Dow, the S&P, and the NASDAQ, we're on track. We're off the highs right now, so we're going to have to figure some of this out in the end. But 4-day winning streak here to the upside. Looks like we just had, as I said, off the highs. Industrials looking like it's rolled over just a little bit.
Andy, you ever been to Dover?
Dover, Delaware?
Yeah.
Oh, of course.
They were ringing the bell. Yeah.
Dover, Delaware.
Dover
Corp.
Motorsports. Yeah.
Oh, okay.
The
Oh,
casino
Dover,
and the
yeah.
racetrack. Yeah, the whole thing.
Right.
That's who it is.
Yeah. Yeah.
Only been
There
to
they
town.
are.
It's not really NASCAR time of year in this part of the
Right.
country, but
Yeah.
you know, just in case.
DVD. We'll have to check them out. Looks like real photo finish on the industrials. They might pull it out and give us all 11 sectors to the upside. Nope, doesn't look like it's going to happen.
It's
Boeing. It's
right, because you know, we come in this morning and the Boeing story's out, and I think all of our reaction was obviously this is terrible news, and then the stock was down 1.5%, I think, when we were meeting this morning, and we're like, oh, you know, maybe it'll just end up coming back. But I mean, the stock was sold relentlessly all day because it would seem to me, Andy, that this is the real thing for Boeing.
I mean, there was capitulation today with the stock to a degree, and I think you're spot on. I mean, people have been saying, oh, it'll blow over, basically. And today was sort of the first day you got the feeling that people were saying, you know, this is systemic. And, you know, we've talked about prior, maybe it's existential. I think that's too strong. But systemic, impeding this company for the foreseeable future. Full stop, 2020, gone, right? Write it off. And you may get a bounce because there may be, you know, I want to be careful here because, you know, you may get relief pointing to 2021 in the second half of 2020, which will make the stock go up big time there.
There's the defense part of the business, which has done quite well, and that bolsters the stock.
But you know, Miles, they're putting these airplanes in hangars. They can't deliver
42 a month.
Right.
That just roll off.
Can you imagine?
And go someplace else.
That would be a photograph to see, wouldn't it?
Yeah. I mean, just
hundreds of these planes.
What the dollar amount that is going
Billions.
out the door and sitting there, and then what are they going to have to do with these planes to get them flight-worthy, retrofit, get approved, have an FAA person there?
And they're highly skilled employees too, Jen. So in other words, you know, they're sitting there. If these people aren't treated right, they're going to walk, particularly in this labor market. You know, there are other places to go besides Boeing.
The 52-week low on the stock is 292, so it's still above that 52-week high, 446 today. I mean, it lost another % since we sat down here.
I mean, it's underperforming the Dow by 22 percentage points, something like that.
Yeah.
So it's quite a market underperformance.
Right.
So outside of Boeing, you know,
everything's awesome. Let me tell you, everything is
looking pretty good today. It was definitely a risk-on day here, leading the Dow higher, and we're going to be talking a little bit about the healthcare trade coming up. But United Healthcare, Pfizer, both up more than 2%. All-time high for Apple here, continuing to chug along, 1.7%. A little bit more of a mixed bag in some of our momentum names. We noted that Beyond was down, but there were some of our other IPO names as well that weren't completely off to the races here today. Your Real off 1.6%. You know, your Fiverr, smaller names, still got Uber up over 5%, Pinterest up over 4%. Lyft making a move up 2.5% as well.
Well, that's a big, you know, sort of pivot into the risk, right? I mean, that is not small stuff.
And it's been interesting to see over the last, you know, month or so, let's call it maybe 2 months, where you have the actual just S&P regular stocks getting to new highs, and some of these momentum names, some of these riskier parts of the market have actually taken it on the chin a little bit, because if investors don't have to camp out there and say, oh, let me pay 20 times revenue for some software name I only kind of understand, then they can just move on to buying like Procter & Gamble.
Well, with these elevated levels, with, you know, the big names all up this much, I mean, you've got to ask yourself where you're going to go. Right? And so risk on is an obvious one. And then, you know, you were asking about EM with our guests earlier. So, you know, that's going to be a big question in 2020. So we're at this very lofty plateau. And if you believe Miles Udland, there's nowhere to go but up.
Right.
No, I'm being facetious, but you know.
I wouldn't disagree with that. I wouldn't disagree with that characterization.
Okay. Well, you know what she's going to do the whole decade.
No. Oh, there have been a bunch of stories about that this weekend.
I saw a mushroom story over the weekend, right?
Everyone has seen this mushroom story.